Welcome to the next weekly outlook and our first weekly outlook actually of 2022 here. So as always, we're going to go through fundamentals and then technicals with Stefanos.
What's up, guys? Hope everyone had a great year last year and, had a great Christmas, holidays, all that stuff. But it's time to get back into the charts. I was pumped for this morning. I don't know about you guys. Let's get into a little breakdown for you guys and get into it.
Yeah, so let's start off with fundamentals. So today I wanted to kind of show the two ways that a lot of people are handling COVID. So in the United States itself, we saw today, for example, in the New York Stock Exchange and even for Bitcoin, a lot of other assets, a huge meltdown happening, right? A huge tank, and all of that is coming from the rise in cases, specifically in the United States. So last week, we saw about 1 million cases being diagnosed in one day on Monday last week, right after the holidays. And then now we're starting to see that New York sees signs of Omicron peak while ICUs remain pressured. So we are starting to see that pressure that we were talking about in hospitalization. Is it as severe as the previous variants? Not really. So that's what we're being told, at least, right? That this new variant is not as deadly as the previous ones, but it is being pretty much passed around. It's a lot more contagious than the previous variants. A lot more people are catching the new variant than there were the previous variants that were coming out. So we are starting to see that they have reached a peak, or that we're approaching a peak. And in the next couple of weeks, we're actually going to see what's the real data like. So unlike the last time, in 2020 around the holidays, we actually saw lockdowns happening, right? And then we started to look at the data in 2021 as a new year started to open up and all that. But the case here is a little bit different. And the reason why is because we didn't have a lockdown in December, right? In 2021, we did not have a lockdown officially, but there were still a lot of people who were being cautious. They were still being advised, so to say, that don't have large gatherings because of the new variant. People are testing positive pretty much left and right here. And now we are going to look at all the data. Even though we didn't have an official lockdown, we're going to look at all the data in the next couple of weeks. So right now we're starting to see how this is starting to impact the markets, how we're starting to see that pullback from that huge positive optimism that we saw last year. Pretty much all of last year, we did pretty well reaching some of the higher time frame levels, as Stefanos is going to go over in our technical analysis part. But now we're starting to see that fear settling in, those corrections coming in from all that optimism that we saw in the last couple of months. And all that is coming because of the new variant. So in the United States, now we're starting to see new positive cases, and we're starting to see a little bit of being more cautious, hospitalization being pressured, the entire healthcare system being pressured. And then potentially, are we going to see some more lockdowns or some form of a lockdown, maybe further restrictions, right? So that's the next thing that we're kind of headed towards as we're starting to get this data. On the other hand, we're starting to see that flyers are primed for long trips with the UK easing testing rules. So now, as in the United States, you're seeing these positive cases, you're starting to see more your testings, you're starting to see, get your booster vaccination and all that type of stuff, those incentives. On the other hand, in the UK, yes, COVID is rising, but they're just easing the testing rules now. So these are two different ways that the world at the moment is pretty much handling COVID. So some countries are here with the UK where they understand that, hey, the COVID is pretty much, at its peak right now with the new variant and all that type of stuff. We are probably going to see more people being tested positive, maybe more people being hospitalized in the next couple of weeks. But they also understand that if they were to put out any more restrictions, they will get a huge hit in their economy. So you guys still have to remember that Brexit was not long ago, right? So those consequences, they're still coming into play. UK is still dealing with that. There's still a lot of back and forth happening with the EU, with the post-Brexit conversations. And then there are, on the other hand, you have countries like the United States and a couple of other countries who are saying that maybe we should start talking about more incentives to get more people vaccinated. Maybe there are other restrictions that we'll have to put in place. Are we going to have another official lockdown? Very unlikely, but we are probably going to see some more of restrictions coming into place. Maybe advising that don't have large parties, or all that type of stuff that we saw in 2020. So going into this week, we started off pretty easy, and we're getting ready for tomorrow in New York session. So tomorrow, on Tuesday, you're going to have Powell testifying. So this is his renomination to the chair of the Federal Reserve. So obviously you want to pay real attention to this, because he is going to be talking about his plans especially with the Fed rate hikes and all that type of stuff. There's a huge possibility he will be mentioning all this type of things, right? And the market will react to it heavily. Stocks, maybe even crypto, but currencies for sure and stocks for sure. So you want to pay real close attention to what he's saying, what are his plans, what are some other, besides interest rates and all that type of stuff, how is he going to combat inflation? So tomorrow you have Federal Chair Powell, and then on Wednesday, you have CPI coming out in New York session, right? 30 minutes right when New York opens up, you have CPI coming out. And this is going to be very important, obviously, because these are some of the things that will dictate what is the Fed going to do at their next meeting. Are we actually going to increase the rate hikes? So these are things that they have been talking about. These are the sentiments that they have been putting out, that we can expect to see earlier rate hikes than they had said before. So instead of June, maybe in March, right? But this data is what's going to dictate whether or not we're actually going to have that happen. So you want to pay attention to that. And then going into Thursday, you have PPI coming out. So that this is from the consumer's perspective, very important. But then this is also from the producer's perspective here. So you want to pay attention to both of them. And then on Thursday, you also have unemployment claims coming out. So not much going on, as you can see in a lot of the other sessions. Pretty quiet sessions, maybe one or two fundamentals here and there, but majority of the important pressure is going to be on the New York session this week.
Sorry, if I could just hop on or just touch on something when you were talking about PPI and CPI, like one thing that you got to realize too, guys, is the fact that PPI, obviously that's the producer's prices, and then CPI is consumer. So the year over year number last year, I believe, ended at 10% for PPI, right? For year over year, something around 10%. And then CPI, as you guys know, probably around 7%. So that tells you guys that producers haven't really passed the cost off to consumers that much yet, right? That's where like we need to be aware of some of the inflation numbers going up. And you guys think that inflation's pretty high right now, which it is, to be honest with you, it is. But it's not even that high yet compared to like what happens when the producers really start passing it off to the consumer. That's when you're really going to start seeing a lot of things. Like they're eating some of these costs. Who knows what happens industry to industry, but you know, by the numbers year over year, that's 10%. Then you got around 7% for the consumer. So we don't see as much inflation as the producers do yet.
Right. And these are the things that, again, the Federal Reserve is going to take into consideration. And so maybe the same thing's going to happen that happened with the Bank of England, where you had this entire optimism in October that, hey, we're going to have a rate hike, and then they didn't actually do it. And then the following month, so I believe it was in December, they actually did end up doing a rate hike, and then you saw this entire push up again. So is that a scenario that we could probably see in the United States? Very likely. Right. So again, you have to pay attention to this data, because this is already going to tell you what's happening in the future and what can you expect in the future, so that you don't get blindsided in some of your trades.
I'm sure we'll see that a lot with different governments, because you know no one really knows what to do in this environment right now, especially because central banks are creating this inflation.
Yeah. And one of the things is that in the past, the entire year, almost everything that we have seen happening in the UK, right after a couple of months, it's the same exact thing that happens in the United States. So is this one of those things? Possibly. But for the economic calendar, that's pretty much it. And on Friday, you have the retail sales coming out in New York session again. So I'm going to go ahead and pass it over to Stefanos now.
I basically have the skeleton drawn up for you guys, some of these major levels over here that I just wanted to point out. But as you guys know, let me just get the annotation. This whole move up is that recovery from COVID. We had our tank from COVID, and then we've just been pushing all the way back up. And what we did actually was push right back up to 156 up here, right? So 156 was a significant resistance over here. We held it, and we came right back down to the previous candle body highs over here to the left to hold support. Now, looking more specifically at these recent monthly candles, as Sharma was just pointing out, what you have here is the move up from that from the sentiment that the Bank of England was going to increase rates, right? So we push up to 152,200, but we end up closing below 156. Now, what happened? This wasn't caused by not increasing rates, but it just ended up closing that way. And then the following month, obviously, those numbers come out the beginning of the next month. We ended up staying below this level. And then what happened was they didn't increase rates in November. So we pushed all the way down to 149 and basically corrected that entire move up. And then what did they do last month? They actually increased rates. So right here at a key level, right, in this bullish trend, as well as the previous candle body highs holding support, previous support as well. Price ended up bouncing off and continuing right back up. So the current monthly candle for January for the new year already created its bottom wick, and now it's flipping. It already flipped bullish to create this top wick up here and tap into this whole area of 158. And now it looks like we're rejecting, coming kind of below 156 maybe. So that's what we'll look at in the lower time frames. Moving down to the weekly over here, you have our resistance that we're just looking at. We can also, what I like to do is do it with the wicks over here based on the fact that it's the weekly. So these wicks are resistances on the lower time frame. Same thing with bottom wicks on the support. So right now, what we ended up doing was tapping into this key area. You can actually move, do that if you want. I don't really do that, but we ended up rejecting this whole area, and this candle ended up closing right back at these candle body highs. This candle pushed up, created a top wick, and came right back down to 156 over here. So the question is, are we going to hold this as a support, or are we going to start continuing right back down? We got some levels to break first before we do that, especially 156, but it could very well happen.
And mimic the moves from the left, right?
Yes. Which ones?
The one where your cursor was right now.
Oh, right here. Yeah.
Yeah. Maybe mimic that move entire down. But again, you're sitting at key levels, the monthly, weekly levels, even with the whole optimism sentiment leading to interest rates. Notice how we were still closing at those key levels. We didn't close above or anything like that. We were testing highs. But again, the market needs that data coming out in order to support that move up. When that didn't happen, that's when the meltdown happened. And now you're sitting at those key levels again. So of course you need to pay attention to some of these fundamentals that will be coming out in this week and next week.
It's the same thing for you scalpers out there on the 30-minute time frame. When you guys want to take an impulse entry, you need volume, you need fundamentals that are going to give you that impulse entry, a valid one that you can actually rely on, right? If you don't have any volume, like during Asian session, you get the same setup. It's probably not going to play out because you don't have fundamentals and you don't have volume. It's the first session of the day. So yeah, looking over here at the daily now, we're stuck right back into this range that we're in. So we ended up making this high up here from the sentiment that we were going to increase rates, and then we stalled out around 158, and we were kind of ranging around here. This was the actual move, right? This whole area right here, I would say this is the whole move from not increasing rates, right? It wasn't in here. We were just, buyers were cashing out. This was all just a sentiment move. This didn't actually happen yet. So it's like, all right, we reached 158. We passed 156, right? We came above finally. And now we got to figure out, like, are we going to continue up? Or are they going to actually increase rates, or are they going to not? And that's what ended up happening over here.
And notice how it's the same exact move happening right now with, even if there's like small retest, it's still a huge bullish move up.
Very similar candles.
Yeah.
Right. You see that high being created right up here. Not exactly the same, but you get some consecutive bearish candles over here, strong bearish candles. We end up filling this wick right over here. But now we're going to come below this area and at least tap into this area right here.
Yeah. And if you break below that, then you can catch that same exact move from the left.
Oh, yeah. Yeah, wait for that retest. You could grab the impulse entry coming down to retest this area, but wait for that retest over here and take this thing down. You got a fairly clean move to the left. Same thing with here. Same thing with here. Here. This whole area right over here, you could be catching trades in.
Yep.
Right here. Anywhere in here.
Yep.
Actually here too. Looking at the 4-hour now. Right now, we had a nice move this morning over here. The 4-hour could have been a nice little entry right over here, but there was a couple entries on the 15-minute and the 30-minute between 5:30 and 6 we could have caught, and that's what I'll break down in a second. But right now, if you take a look, since this impulse move up, we've been respecting this trend, pushing up, and now we just broke it. Now kind of forming like a double top up here. So question is, are we going to hold the support or not? I wouldn't get too antsy over here. Right now, we have the previous support right over here to the left. So this is basically a no trade range, right? Do you think price is going to hold support and continue right back up? Wait for this level to break. Do you think we're going to break below? Wait for this level to break. It's that simple. Looking at the 4-hour now.
1 hour.
Oh, 1 hour. Thank you. Long day already. All right. I want to mark this level off right here just because the more recent price action, you have this resistance right over here and this wick coming into that area. So right now we're holding in this range. This is a no trade range. You want to basically stay out of this. Again, you want to get a clean move to the left once we break that resistance, and then to the other side, you have this wick that you could possibly fill. I actually want to make this a little thinner. So now once we close below this area, you could possibly take a trade right into this area with this wick right here. And then once you break that, you got this whole area right here to the left that price is probably going to be reacting to. That might be the main area right there. So you just want to measure that first to see how many pips you have. Okay, so it's a valid range. 37 pips, you can at least grab 20 out of that, right? 15, 20 pips out of that. So to the upside too, I would be marking this level off. You do have the clean move to the left, and typically you could draw your zone up here to continue right back up. That could be a take profit, but I would definitely be ready for any kind of reaction to this area over here, right? We actually did break right through it again this morning, but we did have some trouble on the lower time frames. But right here, no trade range. And if you guys are getting FOMO from this move that you missed it and you're still looking for moves right now, just please don't. This was the move of the morning. You guys got to understand that you have moves of each session. And if you feel like you missed the whole move, that's okay. You journal it, you study it, and then you move on to the next session so that you don't make that same mistake twice.
Yep. So before we go ahead and move on to gold, if you can go into 4 hour real quick, just to add on to why you should probably be waiting for this trade. So if you go on 4 hour and then go back to around October, let's say 20th.
Okay, if I could just break down the 30-minute, I was going to show you guys how you could have grabbed this trade up here. So we ended up breaking the trend over here, right? Then you get a perfect retest right here. So you can either enter this after that bearish candle close on the 30-minute. It's a strong bearish close with a bottom wick. We're starting to close below 2 of these EMAs over here as well. You could enter that. You could have entered as this candle passed the low of it. That would have been a little late, but you could have definitely done that as well. And then a couple of people on Instagram were asking me about this move right here. I think Miles took this in our group as well. He took this as a credited stop wick past the low of that candle. The only thing with this one though is you have this move already coming all the way down here. I was waiting for like a retest right here, and if we didn't get it, I wasn't going to trade. Only because this candle barely is a top wick or bottom wick, right?
That would look more like over an extended move to me, because even if you look to the left, there's a ton of wick rejections and a little bit of consolidation. So that would be an area of concern for me for this entry.
What was this is what I was marking off for him this morning, this area right here. So this candle ended up closing right here where you have all these wick rejections here too. So that's why I was waiting, even though we get a nice top wick over here and it passed the low, still wanted to wait for a traditional retest to then take this thing down during the actual New York session, not just the pre-New York, because this is like 5:30 to 6. You would have taken this. I was doing my workout at the time, so I'm not gonna get too much FOMO over that. But you wanted the 4 hour.
Yeah.
And you wanted October.
Yeah.
Price action.
The last time that price tapped into this area. So look at the same exact move that pretty much happened, the way that we're tapping into the same area, the same move. So I'm going to annotate here real quick. So you had price react off of
annotations, please.
What was that?
I said no annotations, please.
Okay. So we had price tapping into this area, pretty much collected orders, right? And then you had a nice sell-off. We came back, tapped right into the same exact area. This is a sell-off mimicking that we had in the morning, right? And then what happened after that? We started consolidating. What are we doing right now? Consolidating. So you could expect a pullback. You could expect those quick scalp opportunities. But again, these are some areas that you would want to watch out for. So the key thing here is the market pretty much consolidated in this huge zone right here. And those are scalp opportunities, right? If you're looking for your 10, 15 pips, but you want to be very careful and understand the limitations of your trade. If you're looking for a buy, maybe this is the highest that it's going to come to. If you're looking for a sell, maybe this is the lowest that it will come to. So you need to wait for proper break and retest opportunities. After that, when interest rate news finally came out, this was the point when interest rates came out, and then you had a nice sell-off.
That's a great point.
right?
Good
So
point.
you want to be waiting out for these zones, a clear break. You've already seen this happen in the past. There's no reason for you to anticipate a different result this time, right? You already have seen exactly what the market is going to do.
Yeah, absolutely. It's a great point.
Yeah.
And that's why back testing is so important. You guys go back and see what happened in previous and very similar uh, prices over here to the right. It's this is how you get better and you get more confident too, which is almost even better. Moving over to gold. So gold over here, I marked off a couple levels. Obviously 1680. Those of you that trade gold know exactly what that level is. It's held a strong support for a while now. But right now 1750 is a level I marked off as a current support. 1830 has been a rejection area multiple times over here. If you actually take a look at the current price action, you got one rejection here, here. This candle failed to break above, but this candle, you had like a fake out where it came all the way up here and then closed right below. So you got a rejection there, here, and here. So right now we're below 1830. Now, recently with current price action on the lower time frames, 1800 has been a significant level. It's sometimes it's hard to break above 1800 and sometimes it's hard to stay below 1800, right? So that's a key area that we're at right now, and that's why I marked that off. Looking at the weekly right now, we're just sitting in a massive range here on the higher time frame. So there's nothing really to swing or scalp on the higher time frames here, unless you're looking to take price right back down to this level up down here. But again, everything's 50-50 when you're in a range like that. Looking at the previous weekly candle, we got a very strong bearish candle over here. This one right over here. And then after the fake out, we get a very strong bearish candle. Could we be coming down once we pass this wick over here? The only thing is that you want to take a look at is the fact that we're in kind of like a bullish trend. And if you go back to the, stay on the weekly, get rid of that, draw something like this. For some reason, I've been having issues with my trading view where it keeps moving this trend line. It was happening all this morning while we were on the stream. It just kept moving my trend line for some reason. So I don't know why it was doing that. That's why I didn't have that on there. But again, we haven't been trending up. We've been consolidating, but we have been respecting this structure over here. So that's one thing that you need to keep in mind. But nevertheless, you got this previous support over here, 1750, that we could very well be coming down to retest, because every time we tap into 1830, we've been coming right back down to retest this level down here. So the current weekly candle, it looks like it created a bottom wick already, and it's bullish currently. The current daily candles right now are holding support now at this previous resistance. If you remember, throughout December, we were ranging over here, previous support. Then we were ranging below this level over here. We held support in this area again, right? And pushed all the way up. We rejected the area again, pushed all the way up. And now we're in that area again, right? Two very healthy bullish candles over here. This candle, strong bullish candle rejection. This candle created a bottom wick, passing the high of that candle. But now we're starting, you know, we're right at 1800 right here. So are we going to close above or close below? So now we're sitting right here where we had a bunch of ranging this morning. We broke this resistance over here. And we closed above. This candle is kind of, you know, past the high of that candle. It's kind of trying to figure out what it wants to do. Are we going to fill this wick? There's a level over here on the lower time frames I'm going to point out that we need to break above for us to continue up. But you do have clean moves over here, clean ranges that you could be trading in right up here to bring price right back up to 1830. Now, remember, we have CPI and PPI data and retail sales coming out this week. So that's something that you want to keep in mind. Even if you don't pay attention to fundamentals, just keep that in mind right now. Now, looking at the 1 hour, we're right back up at that resistance that we were at this morning. This morning, when we were at this level up here and we were approaching it again, what we were waiting for was a retest of this level to possibly take this up. Now, safer buys would be above 1801.75, this resistance, because you got a nice move coming right back into this level, 1808. Previous resistance and support over here. So you get a clean move. Those are safer buys. What we were saying were higher risk, high reward buys down here if we held support to possibly continue up. But again, we rejected 1800 again. And now we're right back at 1800. So we need to close above this level to continue up. But what we did do is form this higher low over here. Actually, a held support, not really a higher low. But we do see some bullish momentum kind of trying to push up. Unless we hold a resistance and continue down, I think safe sells are going to be below 1788 or 1786 to continue right back down to 1782 to kind of fill this wick over here.
So even in consolidation, the price is always going to tell you which way it's headed. You will always see higher highs, higher lows, or lower highs, lower lows, any of that. Pay attention to the details. So going into this year, you guys should be narrowing in into the details, trying to understand like what are the candles doing. The candles are always going to tell you pretty much where is price headed, right? So those are some of the things that you guys want to pay attention to. There's honestly no like advanced trading. The advanced trading is being able to understand these details. Right. So this is the point that you want to get to in your trading, where you can look at wick rejections, understand what's happening with those wick rejections. Why was there a massive sell-off today for a lot of the assets? Why is there a massive wick rejection here on gold and a massive top wick rejection and a bottom wick rejection, right? And what is that telling you? So these are some of the things that you want to be able to understand. But other than that, I think this is pretty much our weekly outlook. These are some of the things that we're watching out for. You want to be a bit more patient. So as the fundamentals are coming out, and there are pretty important fundamentals like Stefanos just reviewed, and some of the levels that you want to be watching out for this week as well. So be patient. Don't try to take trades within consolidation. You will get knocked around a lot. And don't be too optimistic either. If you do end up taking a trade in a larger time frame consolidation where the range is probably 50 pips or so and you're looking for 10, 15 pips, understand how long can you let your trade run. So don't look for a 100 pip trade if your range is 50 pips. And as always, if you guys have any questions, always feel free to reach out to any of us.
And real quick, with this being the first breakdown of the year, beginning of the year, a lot of you guys have been with us, watching these for the past year and a half already. I think we've been doing it. So, you guys are pretty into your trading careers right now. Like, you understand what you're doing, for most of you at least, unless you guys are brand new. But for the most part, you guys really know what you're doing. So what I want you to do this year is just really hold yourself to a higher standard with your discipline and make sure that you're actually sticking to what you say you're going to do in the market when it comes to securing, when it comes to closing partials, when it comes to any kind of risk management or just trading at a certain time, any of that stuff. Just make sure that you're focusing on the skill and building your discipline over the period of time, because I want you, again, to hold yourself to a high standard this year and really set a lofty goal for the end of the year for your trading, because I think you could be pushing yourself even more if you do so.
Absolutely, 100%. As always, trade safe this week. If you have any questions or anything, feel free to reach out to either of us. We'd be more than happy to answer the questions for you, or even hop onto a Zoom call to help you out, no matter what. And then if you can't reach out to us on Instagram, then you also have the YouTube comments.
Yep.
Have a great week, everyone.
Have a good one.